Good morning, everyone. It's Steve Brown from VPS Securities. Joining us this morning, we have one of the most successful outperforming fund managers year-to-date 2024 in Vietnam. And we have Mr. Tai, who's the fund manager for Dai-ichi Life Vietnam Fund Management. And joining us, he will discuss the macro outlook, where he feels the outperformance will be this year for Vietnam, and then also in his judgment, where the indicators are for advancing Vietnam's stock market and also economy in general. Tai, thank you so much for joining us.
Thank you.
Very good. So how was your judgment in the point of view of DFVN in broad terms?
Okay.
Regarding the macro environment currently?
Thank you. So I think from our side as an institutional investor, when you look into Vietnam economy, they look into the growth story. So they have some growth engine here. First one is about the trade, I mean the import-export. So this import-export activity is very good at the moment. They grow good, especially they significantly contributed from the FDI sector in the export-import. The second engine is investment. So we have a check. We monitoring the investment from the state and from the private investment. So during Q1, we can see the state's investment increase very good. Why? In the meanwhile, the private investment is a little bit go down. Okay. And another one is about the FDI, the PMI, etc. Is mixed up. So this is the growth engine.
PMI did bounce back over 50 recently, didn't it?
Yes. Yeah. Besides the growth engine, they have some side effects, is it? So some side effects including inflation and FX situation. So as you know, FX recently is under pressure. Vietnam Dong depreciated recently due to DXY index increase because of Fed fund rate keep at the high level quite long. For inflation of Vietnam, still under control, but not a low level. So they have some risk there. Okay. And so my conclusion on the macro situation is that they have divergent. However, in terms of foreign exchange rate pressure, I think with the very good disbursement from FDI, from remittance and trade surplus, these factors give SPV the room to manage, to control the Vietnam Dong. Yes.
So you think that the Q1 effect of the Dixie and also the regional depreciation of currencies,
yes.
Vietnam's dongs started to stabilize now. We've had the bit of a market correction. Everyone was expecting the Fed to start easing sooner, but it's probably going to be later. So how is your view then on the equity market in the coming time?
Okay. When we evaluate the market movement, normally we base on the three factors. The first one is the prospect of corporate earning growth linked into the valuation of the invested company. As you know, the Q1 corporate earning is not that good, lower than expected. Still increase over 10%, but on the low base of last year. So investor expected higher. But I think listed company need more time to observe the supporting policy. So overall, the corporate earning in Q1 lower than expected. Second factor is the trading liquidity. I mean the cash flow in on the market. So with the current low interest rate environment, this support to the cash flow on the market. However, we closely monitoring and we see that they have divergence among investor cash flow, notably the foreign investor net outflow during last year 2023 and year-to-date 2024. And people worry about the foreign investor net outflow. For me, I think foreign investor will soon be back with the Vietnam equity market. based on two explanations. The first one is I think after local Vietnam situation become cooling down in terms of inflation, exchange rate, foreign investor will soon come back. Especially the second explanation is about the emerging market upgrade closure, when at that time foreign investor would be back.
With that one, it's probably the next important factor will be in September. FTSE Russell will publish their annual report. Vietnam is already on the watch list of FTSE Russell. It's likely we will get positive news, and with any luck, we will get the last remaining points ticked off that they need, such as pre-funding, central clearing, and then also the pari passu distribution and dissemination of company press releases and reports and announcements in Vietnamese and English for international investors. And that one is quite easy to do. You know, the skills, the language skills in Vietnam are world class, so there's no problem with that one. And then with any luck, it'll be maybe Q1 or Q2 that we will advance into the first emerging market index accreditation with FTSE Russell. So you're right, you know, the good news is starting to come on strong.
Besides these two perspectives, I thought that there are three perspectives. The third one is about the potential risk. The first one is corporate earning outlook. The second one is cash flow into the market, and the third one is potential risk. So for me, I think almost risks in the market have been priced in the market. Upcoming time, serious risk, or I say catastrophic risk to happen is a low possibility.
Well, I would agree. I think the market risks now, all the extraterritorial market activities kind of already been factored in, you know, like some global conflicts, and then also locally we've had, you know, the SBV really in a considered way manage the currency, manage the interest rates.
So we think that in the short term, market in the mood of sideways. I have in the chart we look back the VN index since 2009 up to now. So during that period, we can see that roughly 70% to 80% the market move in the sideways. The sideways means that the market move up and down, but in the narrow band, and not clear yet for the trending. During that period, we only have two trending, and each trending just very short on roughly 2 years, each trending. And since 2023 up to now, our point of view on the market movement is accumulating and the sideways mood, waiting for the upcoming trending.
So which sectors and individual stocks are taking Daiichi Fund Management's interest at the moment, and why?
Okay, thank you. So in our company investment approach, we normally in a normal case, we apply a combination of the top-down, bottom-up approach. We base on the business cycle as well as the local fiscal policy and monetary policy to identify the potential sector to invest in. After we can select the potential investor sector, we look into each individual company in this sector. We evaluate that company to find out whether it is potential to invest or not. So the way we evaluate the company is we have a screening value of own company in each sector based on some very basic indicator like ROE, PE, PB, or debt to equity to see whether this is a potential one or not. If we realize this is a potential opportunity to invest, and then we go into depth valuation, in-depth valuation, we use the discounted cash flow model to determine the intrinsic value of each company. This is we call the fundamental approach. Also, we integrate with the technical analysis, we call TA, integrated into the FA. Why we believe that when we integrate the TA into FA approach, we will have more efficiency result. There have two reasons. The first one, if I purely based on the fundamental approach, I based on some indicator I just told you. The financial indicator will have a lacking compared to the market price movement on the market, because the financial statement that come out after 3 months quarterly, let's say.
Historic.
Yes, historic number, and then it have lacking compared to the market price movement. A second reason is, they have some investor who are expert in some sector, and they are also investor. They can have earlier reaction on the market because we know they know well about the sector characteristics, and that two reasons why we use the TA to get to realize some early signal on the market, and we get back to our fundamental to cross check.
Sure.
Fundamental.
Okay. So that's quite a holistic approach. Some long onlys are very much just bookworms. Look at the balance sheet, look at the financials, and but you do everything. That's which is why your fund's doing so well. You do the fundamentals, you do the corporate access, you go to all the investor meetings. Then you look at also what the market's doing in terms of market liquidity and technical analysis as well. So that then translates into the performance of the fund, and you've basically given the backstory as to one of the primary reasons why it is so successful, historically, and also especially this year to date, which has been a remarkable effort.
Okay.
So we'll cut straight to the chase. You had a very good Q1 2024, and Daiichi Fund Management, you had the CAF fund as well. And could you just run through us with DFVN, how you've seen your performance year to date, and what have been the outperformers in the portfolio?
Okay, thank you, Stephen. So at first, before talking to our fund performance, I would like to share our fund objective is to bring investor an appreciation for access and capital of investor in the long run. And we are striving to bring investor with the outperformance, the overall index, the VN index. Why we, because an institutional investor, we are looking to the performance in the long term rather than the short term. We have do some backtest to see why we believe in the long-term performance. We have the chart here showing that in the long term, our fund have the more stable in terms of risk. We always implement our risk-adjusted return, not only return and risk. We calculate it by standard deviation to see how the portfolio is stable compared to the overall market. So in the chart we can show that our performance in the long term better than the overall market, parallel with the risk, the standard deviation, more stable during some term, for example, 1 year, 3 year, 5 year, or since inception, even since inception.
So good outperforming growth, but also with low volatility.
Yeah, exactly.
And the Capital Appreciation Fund, if you could expand on that one, and we'll have a discussion on that one. That had very good performance in Q1.
So let's say in the short term, in Q1, the first 3 months of this year, our fund performance in terms of return is we achieve 15.6%, which is pretty good compared to the overall benchmark in the market.
Sure.
VN-Index during this same period, Q1 is 13.6. So we have outperformed 2%. So I would like to share a little bit detail in terms of attribution. So normally an attribution of the portfolio performance come from 4 factors. But the 2 factors is exchange rate factor and transaction effect is a minor one. So I don't mention here. I would like to focus on the 2 big factors. This is the allocation effect and selection effect. So in the our attribution model showing that during Q1 we have nearly 2% positive attributed from their 2 factors, allocation effect and transaction effect, especially in terms of sector. Each sector we have the good attribution from technology sector and material sector, thanks to we overweight this there's 2 sectors. And a half they come from allocation and the other half come from the selection. For example, we overweight a lot FPT in our technology, or overweight Halifax Steel and Group GVR in our sector. Meantime, another good contribution come from real estate, thanks to we underweight a lot in our sector. Okay.
So Ty, now to wrap up today's questions, if you could explain a little bit in detail your investment process and your holistic fusion approach to fund management.
Okay, thank you, Stephen. So any institutional investor, they have their own philosophy, investment approach, etc. But for the DFVN, we are proud of with 3 perspectives. The first one is we are in the Japanese style, which is discipline, compliant, risk management, slow and solid. Second one is about our spirit of group. I mean our group spirit on the client first. And the DFVN, we also reflect this spirit client first into our services, into our product. For example, redemption fee. You know, when investors sell out or they divest their investment to get profit, for example, and if their holding period shorter than 12 months, longer than 12 months, so free of redemption fee. But if they holding within 12 months and they sell their investment and have to pay a redemption fee, let's say just 1.5 or 2%. The DFVN, we will refill this redemption fee back into the total asset. So the remaining investor will get benefit from this one. We don't use redemption fee to be our income. So this is one of the example for our spirit client first.
Sure, it's an investor-friendly philosophy, particularly for people who want to get into the market. They want to get into a mutual fund that's professionally managed, and they will know that if they do need to exit, well, they're not going to suffer, you know, a high fee.
Yeah.
You know, so that's a great benefit, particularly for the mass market of Vietnamese investors. You know, and VPS Securities has well over 1.2 million accounts, and our client base, I think, is an exemplar of the entire market, where there is growing interest in getting a broad investment in the market with minimal day-to-day managerial risk, and having to do it too hands-on oneself, and they can, you know, take advantage of experts in the field like yourself and your team. And you know, we're proud to be in alliance with you with that. Mr. Thai, it's been a pleasure. I've had the honour to know Daiichi Fund Management Vietnam and Mr. Thai, the PM of the fund, equity fund, for a long time, about 11 years now. And you are really one of the most experienced fund managers in Vietnam, working for one of the most highly regarded and respected and successful funds in Vietnam. So well done, and thank you so much for being on VPS Live today.
Thank you, Stephen.
Thank you.
Yeah, thank you.